with y'all, man. What's good? Tap in with your boy. Tap in, tap in, tap in. Let's go. Hey, man, tap in with your boy. Tap in, tap in, tap in. Hey, tap in, man. Market going crazy, crazy, man. Tap in. I ain't got too much to talk about, man. Just wanted to give y'all some announcements about what's going on in the economy, man. Give y'all some stocks and robbers updates, man. You know how we coming. You know how we come. Just want to chill with y'all, man. Talking to y'all for a little bit. Tell me how y'all doing, man. How y'all doing in the comments, man. Let me know. Let me know. Hey, just so you know, we got another masterclass coming up next month. The date is to be dated. Okay, YANSN. Okay, you ain't never stole nothing masterclass. Coming with the ebook. Okay, it's $50 or $100 to sign up. $50 if you do the discount criteria, man. Make sure y'all check it out. Tune in, man, because it's amazing information that's been offered in that masterclass. All right. Yeah, so we're gonna have that coming up next month. Had one last month. Next month, still looking for a day. I gotta see what's free in my schedule. You know, I'll be pretty busy. I gotta see what's free in my schedule for next month, but it's gonna be a Saturday and a Sunday. All right. And also I'm thinking about doing a back to school sale on all apparel. Uh, I'm thinking about it. You know, it's gonna come soon. I think I'm gonna do that for you guys. You know, appreciate you guys and all the support. I'm gonna do that for you guys. All right, back to school sale. We're gonna get some amazing discounts going, man. We're gonna get that rocking. We're gonna get that rocking. I can't wait to do that for you guys, honestly. And stay tuned, man. We got some big things coming. Stocks and robbers, man. Big things coming. Big things coming. All right, so let's see. I want to talk to you guys about a little bit of stuff that's been going on in the economy, man. A little bit of stuff that's going on, like for one, the Federal Reserve just raised interest rates another quarter of a basis point, another 25 basis points. Well, another quarter of a percentage, or 25 basis points. Okay, so now it's at 5.25% and 5.5%. That's what the interest rates is at. All right, and that's man. So all the credit card debt, all the mortgage loans and all that stuff, all the interest that you paying on that stuff just got increased by another quarter of a basis point, a quarter of a percentage, another 25 basis points. So man, hey man, you gotta watch out. And it's like they keep raising the interest rates, but soon things is gonna start cracking. You know, like when is they gonna stop raising interest rates? At this point, you know what I mean? What are they looking for? There's not supposed to be a recession anymore. You know what I mean? So they're continuously raising interest rates, which takes a toll on the economy, takes a toll on the consumer. Definitely takes a toll on the consumer, and it ties the monetary supply. So people don't get access to credit, and you know they don't get to make the moves that they was making as far as if they want to do real estate or business things. Now it's harder to get access to capital, and it's also harder to maintain your capital if you was in debt, because now you're paying larger amounts on your debt. Okay, so that's been going on. Inflation's at 3%. Inflation's at 3%, which has been coming down, but I'm gonna drop a post or a video pretty soon here showing y'all the inflation chart, because the inflation chart, if you look back in historical data, you will see that it's been a time where inflation has peaked, and it was like around the 1970s, I believe, 1970s, 1980s. Inflation had peaked, and they brought it all the way down, and then it peaked again. Okay, so whatever happened during that time, something caused inflation. It peaked up. I forgot what percentage. It came down, and then it peaked back up. I think it was in the 1970s, 1980s, because it definitely wasn't in 2000. But um, so it peaked up and went down, then it peaked up again, and then they was able to bring it down to a sustainable level. Well, if I think they giving out a lot of smoke and mirrors. I think they know something coming. That's just my opinion. All right, I'm do not make any financial decisions based on what I'm telling you. Okay, make sure you always do your own research. All right, everything I say is not information for you to buy, hold, or sell anything. Okay, it's just to keep you up to date, keep you informed, and maybe help your perspective and help you build a perspective. But yeah, it's just like, because they put the most money ever into they printed the most money they ever printed ever. Okay, a lot of it. I forgot how much, but I think it was 40% of the monetary supply that was already existing was printed. Uh, so that's a lot. That's what I believe. That's the correct number. And now what they're doing is they when you print money, you cause inflation. So now what they have to do is they have to fight inflation and bring inflation back down. Okay. So in order for them to do that, they had to tighten up monetary supply, this and that, and this and that. So when they was giving out stimulus checks, people thought it was great. You know, it helped a lot of people and this and that. But really, it was a repercussion to that. I'm trying to think of the other word, the saying for it. But so after they did that, now they raised rates the fastest they've ever raised rates ever. My bad, I'm looking around, some wasps around here. I ain't trying to get stung. You know what I'm saying? But they now they've raised rates at the fastest they've ever raised rate. Nah, I ain't gonna say the fastest, but just in a long time. For about, I think it's been a long time since they raised rates this fast, I believe. But and interest rates is higher. The highest has been in 22 years. So, man, it's like it's a lot of big things going on, but they not giving you the full story. So let's talk about some of the stuff that's going on out here. Some of us got some good stuff in here. I got some good stuff. Remember, all this information is coming out of my Discord, man. Out of my Discord. Remember, I said stay tuned. We got some things coming, man. We got some things coming. Okay, things in the mix. Things is in the mix. Okay. Remember, all this information is coming out of my Discord. Let's find it. Federal Reserve raises interest rates to highest since 2001. Let's read it. Let's see some keynotes they got to say. So the Federal Reserve, the federal funds rate, like I said, it's at 5.25% and 5.5%, the highest level since March 2001. This is this is the central bank's 11th straight not the 11th straight increase, but the 11th increase. Hey, how you doing, Ben? My boy Ben. This is the bank's 11th increase since March 2022. Okay, so that's a lot. They've been pretty consistent with raising interest rates. Okay, let's see what we got here. They got to give us a nice graph. Okay, here's some quotes. It says the process of getting inflation back to 2% has a long way to go. Okay, that's what Federal Chair Jerome Powell said. All right, Powell also said that bringing down inflation is likely to bring a period of below trend growth and some softening of labor market conditions. But we've already been experiencing below trend growth. The IMF numbers, that's the industrial manufacturing or whatever. It got something to do with the U.S.'s manufacturing numbers, the data. We haven't been doing too much output on that, so we ain't been selling a lot of the stuff we've been manufacturing. You know, it's been a less demand for that, so that's not good. So in this other things, you know, you got the housing market that hasn't been real fluid lately, and all types of stuff. So the interest rate hikes has been taking a toll on a lot of money getting liquidated and moved around. Okay, let's see what else it says. So it says, we haven't made a decision to go every other meeting. It is not something we looked at. We will go meeting by meeting, asking ourselves the same question. So basically they're saying they're going to go meeting by meeting to see if they need to raise rates again. So A couple months ago, everybody was saying that the Fed was probably going to raise rates 2 more times to end the year for the last half of the year. Well, now it looks like it may be more than that. So it's been one, so it's only supposed to be one more. But now it looks like it may be more than one for the months that's to come. Okay. So let's see what else. Uh, it says for the second half of the year, based on higher expectations for core inflation, the Fed now expects inflation to end the year closer to 4%, up from 3.6% previously, and nearly double the Fed's inflation target. So they're saying inflation is going to end closer to 4%, up from 3% previously. So they're saying it's going to end at 4%. They've been saying a lot of stuff, for real, for real. They say it's supposed to end at 4%. They say they expected it to end the year around 4%, which is higher than what it is now at 3.1%. And from all the information that I've been reading, like I just been telling y'all, the information that they report is never accurate. Like it's never. Of course they ain't going. Of course it ain't going to just end at 4% because they're not gonna give you the information like that. Because everybody would make money if they did. Instead, they gotta play games with you. So who knows where inflation is gonna end at the end of the year? But they expecting it to end higher. Okay. Also, let's talk about this. Inflation data out earlier this month showed that on a core basis, which strips out the more volatile cost of food and gas, so core inflation is inflation without food and gas incorporated in the price, and that rose 4.8% over the prior year in June. So that's up 4.8% since last year. Including food and energy, headline inflation rose 3% in June, down from a peak of 9% last year, and the slowest annual increase since March 2021. So inflation decreased 6% since last year, since last June. All right, June we in now. Decreased, so that's good. That's pretty good. Inflation peaked at 9%. It's at 3% right now. We're trying to get it to 2%. All right, that's that article. Let's see if I can find some more hot roddy. Man, they still talking about AT&T. AT&T initiates $2 billion cost-cutting program after topping estimates for quarterly free cash flow and reiterated it was conducting its own assessment of the lead cable site. So they got the lead cable sites, whatever they gotta clean up or whatever. And so but one thing that's noticeable about this isn't the full article, this is the summary. It just says their free cash flow, they topped their estimates for quarterly free cash flow. That's good because AT&T pays a dividend. Free cash flow is the money that you have that's basically you can use that to it's just basically like profits almost in a way. Basically like profit. You can use that money to pay out people or save it for savings in your business or whatever you want to do with it, but it's free cash flow. It's something that it's like just bonus money. Like it's just an extra pool of money that you're making from being efficient with your business. Okay, so AT&T topped the estimates. That's good for AT&T. Just something quick to talk about real quick. Plus them lead cables, because they making that sound like it's a big deal. So that might take a toll on the AT&T and Verizon price, and maybe all the phone company prices. So if you're looking at buying the phone companies, that might be something that you can capitalize off of. Let's see what else we can find right here. Okay, that was a good one. Oh, this is a great one right here. Okay, this is a great one. I'm gonna give y'all two more. Give y'all two more articles, two more little ones. We're gonna get right real quick. Remember, all this information is coming from my Discord. You want the best information in the world, man, hop in the Discord. You want access to the best minds, man, the best community to grow. Hop in the Discord. Okay, so this article is called American Retirement Confidence, the lowest it's ever been, okay? Americans' retirement confidence, the lowest it's ever been. So this is people who want to retire. The share of Americans who think they'll be financially prepared for a comfortable retirement dropped sharply this year, according to a new study this week. Man, that's horrible, man. This is our elderly. BlackRock found that only 56% of folks say they feel on track for retirement, down from 63% in 2022 and 68% in 2021. So it's been slowly decreasing since about the pandemic. Not even slowly decreasing. It's been decreasing pretty fast. The group whose confidence waned the most was Gen Z, who were also more likely than baby boomers to say they will consider selling investments during a market downturn. Okay, so I recently read in a book that um, basically when you're in the stock market, uh, sometimes like when your time horizon means everything. So when you get in the stock market and you get old, you can't hold through retirement, you can't hold your investments because of like we're going through something like the pandemic and you finna retire, you don't got time to let all your money fall all the way down and this and that. You gonna have to take that money out. So sometimes around when people get to retirement, that'll be like the most pivotal. I ain't gonna say the most pivotal, but that's like an important time to look at your situation, look at the economy, and see if you should take all the money out because around retirement you probably be around, let's say, uh, 60, 50 to 60, 50 to 70, let's just say, and you don't have a lot of time to let your investments fall down and you buy the dip and it grow again. You don't have that much time, okay? So that was just some little information I'm spelling out there to anybody who in that age range who got some investments. Yeah, uh, you can't live through a recession. If we go through a recession, you got all your investments in there, and you're like 50 to 70 years old. Well, it's probably a good time. If you think it's a recession coming, it's probably a good time for you to take out a lot of your investments. Remember, what I'm saying is not information for you to do anything. Just a perspective. Probably a good time for you to take some profits out, leave some in there, maybe you know what I mean. Maybe leave some in there to grow on, something to pay you some dividends, so you can keep some free cash, some cash flow, and some passive income coming through. But once you're around that age and the economy look like it's gonna turn around, you don't know what's coming next. It's probably best to capitalize on that. The only thing you got to consider is how you gonna pass down your wealth. Because if you capitalize on it, you wouldn't be able to pass it down in the form of like a will. Well, I mean, you probably would, but it'll be cash, you know. So you gotta figure out how to pass that cash down to your kids if you did capitalize on it. That's a long spiel, man. That was a long spiel. Let's get back to it. That was from my Gen Z baby boomers out there, man. I know some of y'all in there. I be seeing y'all in my data, or I be seeing y'all when I be checking it. Y'all be watching. Okay, let's see. The decline in confidence underscores how market volatility and inflation have made people more worried about running out of money now and in the future. Okay. Okay, let's see. Okay. Let's see. Okay, let's just leave this alone. That was some good information right there, man. Cause, man, it's really important to know, man, that America is not handling her elderly well. The people who took care of everything. The wealthy people are okay, but the poor and middle class, man, they're taking a toll. With these food prices and all this stuff, a lot of like when you go to the store, you see a lot of older people working still. You know, and a lot some of the times it's not voluntary. They have to work to pay their bills. You know, so that's not cool because we should be able to provide the information for our elderly to be able to sit back, relax, and they should be able to have some investment, some ownership, some equity in something, so they don't have to continue to work for their whole life. You know what I mean? All right, so let's read this last one real quick. It says. GDP, U.S. economy grows at a faster pace than expected in Q2. The U.S. economy grew at a faster than expected pace in the second quarter of 2023, adding to signs that the threat of a recession has faded in the immediate term. Hey, how you doing? How you doing? Let me know how you feel in the comments, man. It says, the Bureau of Economic blah, 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 it shows that GDP, gross domestic product, which is the measure of how good the economy is doing. It says showed the economy grew at an annualized pace of 2.4% during the period, faster than consensus forecast. Economists expected the economy to grow at an annualized pace of 1.8%. So the economy is doing better than what people are expecting. So that's good. That's really good. Okay? Because if the economy ain't growing, then that ain't good. And we losing money. Okay? But it shows us this wonderful chart in this article, and I'm gonna make a video about that. Okay? It says the GDP release is one of several upbeat prints, meaning several good beating prints released on Thursday morning. The Department of Labor announced 221,000 people filed jobless claims in the week ending July 22nd, the lowest number of claims since February. So people aren't claiming they're jobless. That's good, okay, but that's not good for the interest rates, because they're gonna keep raising interest rates. As long as the economy can shows that it can bear these interest rates, they're gonna keep raising them. You keep raising them until inflation gets to 2%, or until something breaks. Because once something breaks and breaks all the way, because the banking sector wasn't a full break, it was just a little crack, but it wasn't something to really influence a major financial meltdown. But once something breaks, they're gonna have to stop raising rates. And once they stop raising rates, that's a sign. That's a sign that the market can't take it no more, or it might be a good sign we reach 2% inflation. Okay. Meanwhile, data from the U.S. Census Bureau showed durable goods orders increased 4.7% in June. Blah 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 blah. It says the economy withstood pervasive pressures from persistent recession fears, elevated interest rates, the Fed's hawkish policy tilt, and tighter bank lending standards. So the economy is still doing good, still working, still going. The system is still cranking with all of this pressure on it. So that's good. That's good. But you also gotta remember that the U.S. consumer is neck high in credit card debt. Okay. Okay, it says consumers are responding to it with more upbeat economic confidence readings, and Wall Street is responding by lowering recession forecasts and projections for growth in the coming quarters. Okay, so that's good. That's good. That's good. Overall resilience of the economy. The fact that we've been able to achieve disinflation so far without any meaningful negative impact on the labor market, the strength of the economy overall, that's a good thing. Powell said. It's good to see that. Of course, you see a consumer confidence coming up and things like that. That will support activity going forward. So that's good. But we gotta wonder which consumer is confident. The ones who are what consumer is confident? Because a lot of people are paying a lot of money that they really don't want to pay for food and all this type of stuff. And gas prices is finna go back up. Like you've been seeing their approach. And which consumer is confident? The ones who the middle class consumer, the poor class consumer, or the wealthy consumer? Because man, how is the consumer confident when they gotta use their credit card to pay for food and pay their bills and all this stuff? So man, we gotta just keep looking at the data, man. Just keep thinking between the lines. Like I said, the information they put out is just something for you to read. You gotta think about what they saying. You gotta put it together. You gotta make your own conviction and have your own side. Me, from my perspective, I don't think this rally gonna last too much longer. I think it's all being fueled by the media. It's being fueled by FOMO, and it really ain't moving right now. It really is really not. It's actually pretty stagnant right now as far as this week and last week. So that means the buyers ain't been buying as much, as heavily. So the only thing that could push this market up, hey, how you doing? Let me know how you feeling in the comments. Thank you for coming. The only thing that could push this market up would be new investors, because the smart money is not buying right now. I'm pretty sure of that. I'm pretty sure smart money wouldn't be buying nothing that's not undervalued or or fairly priced, because that's not the smart thing to do. Okay, things have ran up. The market's been running up since October. A lot of people really missed their beat. That's what's really going on. So I really don't expect. That's what I feel. Okay, I feel like we got another downturn coming. I don't know when. Maybe at the end of the year, but it won't come until the media influences it. You know, as long as the media putting out good press and the market's still green, you know, all that good stuff, the market gonna continue to stay where it's at. But once we get that bad news or something, oh man, they start printing that fear. Oh, I'm gonna be ready. I'm gonna be ready. I'm gonna be ready. I'm gonna be ready. There's gonna be a lot of money to be made, man. Y'all wanna learn how to make some money, man, whether the stock market green or red, make sure y'all tap in. Y'all get in the Discord, because that's where it's at. Man, y'all make sure y'all join the Telegrams. Awesome place to be, man, finding discounts, to be a part of where just to be a part of something, a community where you can feel appreciated, you know, for your support. Okay? Hey, masterclass coming up next month, man. Y'all be prepared for that. Back to school sale, man, for the childrens and the students, man. Just everybody. Back to school sale coming up, man. Hey, that's a lot of things. Hey, a lot of things to stay tuned for, man. Stocks and Robbers appreciate you guys. For sure. Alright. Y'all take care, man. Peace.